Hello everybody, hope that you are doing very well and welcome to this evening's Contenders live stream. Number 58, we have 58 Contenders live stream we're on tonight. Hope that you are all very well and looking forward to this one. And I have got a new format of doing the live stream tonight, so it's a bit of an experimental one, I suppose. As I was hinting on last week, I myself have been taking mental shit for how to better improve the quality of presentations that I do. So hopefully it's working, and you can see tonight there has been another once again improvement as I myself try and become now the best mentor as well as being the best trader. So yeah, it's a little bit different tonight. So I will just say I appreciate all the feedback. So whether you have some, by the end of this, you have some things that you think I could improve upon, or whether you think it was a lot better than normal, then please let me know at the end of the stream. That would be brilliant. So yeah, welcome to the new, potentially, unless nobody likes it, then we can go back. But yeah, the new layout of tonight's stream. So yeah, hope that you enjoy, and yeah, let's get into the live stream then. So. First thing to start off with is this trade disclaimer. So as always, this is some important legal information. So if you just want to pause and make sure you've read through the disclaimer here, make sure you fully understand that, and but then you can pause that, give a few minutes, and we'll move on. So, tonight's Contenders live stream, there's three sections that I want to go through in this one, okay? And it's going to be starting off with Tezos chart of the week, so XTZ chart of the week, which has been a really, really lovely example. And it's an example of like when to trade with strength. Okay, when you see bounces, you don't need to get in at the very bottoms of moves. Like you can trade with strength, and it's like reacting off of the levels once they've given a form of. If you're waiting for an entry, then you see a form of demand, and then you're getting in after the initial bounce. Okay, so altcoins obviously at the moment are absolutely on fire. Altcoins are just running so hard. So yeah, I want to start off with Tesla's chart of the week. Then we're going to be moving on to daily routine and what comes along with a daily routine. So this is in terms of planning that goes into the trades, because I think that there's a big barrier at the moment between people that are understanding the theory side of things. Okay, we've got obviously this is the 58th live stream. You have a lot of theory under your belt, but then I feel there's like a big discrepancy between the people that understand the theory and then that last step push forwards onto then actually trading. And it's quite a big jump to get to from that theory stage to actually putting it into practical use. So today is going to be a little bit, because I'm changing the daily trading updates. They're going to be updated with new information. So I wanted to just give you a rundown of what that is, as well as putting this into like how you can form your own routine when it comes to what's the first thing you do when you start your trading day. Okay, so we're going to be going over that. And then lastly, we're going to be going over onto the questions, obviously. So any questions that you do have, I recommend you save all questions to the end, because it's likely that I might answer your questions as we go through. So what I would say is, because it's really recommended that you do turn off all distractions. So you do turn off the Bitcoin charts right now, turn off your mobiles and everything that might distract you from the stream. Give your full attention to me. And that includes also putting this live stream on full screen. And that might mean that you won't have access to writing your questions straight away in the chat. So what I personally recommend is that if you have a question, write it down on a bit of paper in front of you as that comes to your brain. And then at the end of the stream, once I've finished, if you still have that question, then you can write it in the chat. And obviously, I will answer it for you. So that's the way I recommend. So yeah, let's begin then with Tezos chart of the week. Yeah, it was a pretty nice setup that we had going on here. This was obviously coming back, coming back onto the 618. I'm going to load up the TradingView screen in a second, but this was basically what we had going on. We were coming down into the big 618, onto the weekly, onto a monthly confluence. Okay, so naturally there was a bit of a bounce that had already occurred off of that 618 level. And again, the context is always really important. Okay, so here I was looking at Tezos. Okay, a long entry with strength of the bounce. My take profit is set at the monthly, and the trade setup invalidation is low of the wick. I do like to trade. Always we're looking at context. The context for me of this trade is that Bitcoin is range bound, especially, when I posted this for you a few days ago, Bitcoin was very much range bound. So we're seeing low volatility on Bitcoin, good for alts. So that's context of why I was more looking for strength on this. Secondary, the context that Ethereum was really, really strong. And so if Ethereum's strong, I'm expecting altcoins to do well. as well as just the general fact that altcoins in general are doing well at the moment. So the context was there for a more aggressive entry. Let's put it like that. That's the reason why I could give myself space to be aggressive on this entry. Okay, and if I load up this for you, coming over into TradingView, you can see that this is what it looks like now. Okay, I want to talk you through this, pretty briefly here. So what you can see is originally, okay, so really simple. Okay, so we'll come to the daily chart here. You always know you start your analysis obviously from the higher term timeframes to the lower term timeframes. That's always the way that you do these things. And really nice. Let me just hide all those fibs so you can see a little bit cleaner. Would make sense. So you see this is where we're seeing then confluence. Okay, so you obviously have the CC here below you, which is from your way back in January 2000, way back in the start of the year. You had that really big impulsive move on Tezos, okay, reaching all-time highs. You then had the first pullback here onto the 618. Okay, and you had a secondary bounce from that. Was actually a really nice bounce. That's over a 50% bounce. Okay, until you pull back once, back up, pull back again. So you can view this always really simply as like A, B, C, where you could view this as alternatively impulse. There's your flag, and then your impulse back out of it. Whether way you look at this, it's reaching a region once again of potential opportunity. Okay, so what I like to do in these instances is work out where's the potential opportunity. So obviously from this last bounce, you were given a monthly level. So we had our new monthly that formed for that bounce, and then you obviously come back down. So we are aware that we have now a monthly, a weekly, and the 618 all on top of each other. So we're seeing this big confluence here come onto each other. In the terms of Tezos, one of the biggest altcoins, in my opinion, it's one of the biggest altcoins. Like a really big altcoin that not many people are trading, or it's one of the few that was still selling off. Okay, so while many altcoins were running really hard, Tezos was one of the ones that was still lagging behind. So you want to really, in terms of like opportunity, you always want to get in at something that's at its lowest value. So for instance, you go across to TradingView and you see something's already pumped 20% on the day. I would be a little bit more interested in terms of a swing trade in getting something that's, down 5% on the day than longing something that's up 20% on the day. So we could see that this opportunity was arising while everything else was really running. Tezos was still lagging behind. And then we get to the opportunity that's presented to us. Again, if I just hide this, okay, then you can see what really occurs down here on the lower term timeframes. Okay, so on the lower term timeframes here, it's pretty nice how it all occurred. So we had the initial bounce off of the level, okay? Had our initial bounce. From that initial bounce, this monthly, which was really nice prior support, consolidation, drop through, flipped back into resistance. But this is the setup, this is a setup that I've shown you countless times. You bounce off of the 618, okay? Our overall global 618, and this is what I refer to by global versus local. Okay, so this for me here, from the very low to the very high of this whole impulse on the daily / weekly charts, this is our global CC. So this is a very big support. This is the global CC. Okay, very big support level. And so then when you see a bounce from the global CC like this, okay, once you see that bounce from the global CC, you can see how technical analysis is just amazing, how you get that really nice flip of the old support flipping to resistance but pulling back. And this is where I got very much interested in it, where I saw the perfect CC bounce off of this, like perfect CC bounce. So what I'm seeing here, I was not entering at this point. I was waiting for another strength, which gave me the trend change, because then we have the bounce from the global CC, from a flip of the resistance of the monthly to pulling back and getting a perfect bounce off of the local CC. Okay, but then that bounce ends in a trend change. So now I'm getting all the context coming together. I'm seeing a bounce off of the global CC, coming back to the local CC and bouncing once more. And now we've got trend change off of a really big demand zone. So now we are going high, higher low. This is still a risky buy, in my opinion. But then when we get this trend change, we make the higher high, then we've got low, high, higher low, higher high, higher low, higher high, higher low, higher high, higher low, higher high, higher low. This doesn't end. So we've got the market structure in our favor. That is greatly increasing our probabilities that this trade is going to play out. So I was looking for this trade with the strength of seeing a market structure change as well as getting back above the monthly. Okay, so that once old support that had flipped into resistance to the CC, got the trend change. Okay, and essentially, I thought, we're off to the races here, pretty much. Like this is ready to fly. This is ready to go. Just as every other alt at that moment in time was ready, I felt it was time for Tezos, and I got it right. Let's be honest, I got it right, because this has not stopped. It just has not really stopped. It went. Okay, so if we just take it back a step, I suppose, you can see how it continued with these CC bounces. So bouncing off the CC, bouncing off the CC, again here, bouncing off the CC, and then you get this sideways consolidation, really big impulse to the upside. Again, bounce off the CC, up again, and then this is where it's come up. It's just kept going and going and going today, it felt like, or over the last few days, like bouncing, CC, continuing upwards here, coming back down again, and this is still all higher highs and higher lows this whole time. Like, not getting even if you're just trading stops, you're just making money. Okay, and you continue up, and then this is where we got our first bit of resistance today. As you can see, a big pullback off this level. And have a guess what happened to Bitcoin when Tezos pulled back here. And I think you're just going to be amazed. It's really not so difficult. Bitcoin goes sideways, altcoins go up, in a very simplistic terms. Okay, today Bitcoin had its big move breaking 9339, and as soon as Bitcoin had that bit of volatility, the Tezos pulled back. All altcoins in general across the board all started to decline in price as Bitcoin was breaking out of the range. So we can see that inverse correlation between volatility on Bitcoin equals likely that altcoins are going to drop in price, or at least their Bitcoin value here. Okay, as Bitcoin has that volatility. So that was confluence with the fact we were off this daily level. So it's amazing how it works, isn't it? That Tezos is pulling back here off of its daily resistance, but also at a time when Bitcoin finally gets a bit of volatility. Like, we've not seen this volatility for the last few weeks in Bitcoin. So I thought that was just amazing, the way that this come together to give that pullback just as Bitcoin got its volatility. Just amazing. But that daily level, so you can see here where I derived that from, really simple stuff. Okay, so really simply, that daily close. Okay, you can see how this is almost coming to the 618 of this high to the low. You're in that region between the 0.5 to the 618, and you're coming up to that daily resistance. Okay, so quite a run. How many times have we seen this? You go down really fast, you go up just as fast. Okay, so it's always that sort of, when you come down like this, you do not build that resistance. And when you do not build that resistance, you can go up just as fast. Just here, there's many examples, isn't there? Okay, so just here, I see it off the, right in my eyes. Here, up here really fast. Okay, up here extremely fast. And what do? You come down just as fast. Okay, you build up here slowly. Okay, and then you come down in a slower fashion, don't you? Until once more, you come down here extremely fast, consolidate, but then you go up here just as fast as you came back down. So it's always this series of this definitely is more bullish. When you clear that first level of resistance, then it can, these especially if it's the context is right of the market and your underlying understanding of the market's right, then there's great opportunity to be had. And this is obviously your last daily before where I was looking for, still am, I'm not out of this position at the moment, but obviously for the monthly up here. Again, that's 27%. We're only like 4 days into the setup, so it's obviously brilliant. Halfway there at the moment, so naturally I've taken profits, and I'll show you another really nice bit of confluence I had on this. Okay, this is with our channel. Again, this is using a Fibonacci channel. As you can see here, I'm taking it from the low, okay, moving up to the next low. So our first low to that low, I'm just moving it up to the highs up here. So our high, two lows up to the high. You can see how our midpoint is really respected. Our 2.5 here, really respected, and also the 7.5 really respected there. And what I think is lovely about this is that you do have the confluence of why it was likely that we were going to have pulled back here, because of the fact we had this support. Okay, support here, drop down through, and then you kind of retest it here, don't you? So you got this confluence of why it was at least going to pull back here. Okay, you had the channel retest, you had the daily, and you also had Bitcoin volatility, which isn't, in my opinion, doesn't help the altcoins. So there was enough reason to expect the pullback here. Does it mean that we get a trend reversal? So now does this go into a higher low and reverse the trend? If so, I'll be I'll be closing out of the trade early because I don't want to see a big trend change occurring here, if I'm honest with you. But if we can just get this pullback, okay, and we actually continue then, still going up here with our, and the bigger scheme of things like higher highs and higher lows, from here, we can just put in our higher low here and continue to trend. So yes, we take profits at these regions, okay, when you see these confluences, but it doesn't mean you have to close out the trade yet. You can wait to see, okay, do we get this trend change? And especially if we start to change the trends and we then start to do this on this increases on low volume, and then we come back out of here on an increased sell volume, well, this is obviously a bit more bearish. So we can be looking at the volume metrics as they happen. Okay, making informed decisions, not just trying to guess what's happening, but actually reacting off of the hard, cold facts that we are presented with in these setups. Okay, so yeah, that was Tezos chart of the week, and yeah, really, really nice trade. And I hope that has assisted you in what we're looking for in terms of entries. I guess I'll talk you through really quickly the invalidate, like why was my invalidation there? So why have I got my stop loss just literally below the low? Although this was a soft stop loss, I'm not going to lie, but nevertheless, my invalidation is below the low. So when I'm buying here, one higher low back, two higher lows back, I like to buy off of. I know I like to use my invalidation, sometimes just two high lows back, as well as the fact I'm thinking to myself, okay, this thing has bounced off the 618, bounced off the CC, done a trend change. If it comes back below here, then I'm wrong in my analysis that we've got a really big demand coming off of the CC. I'm totally wrong in my analysis if that's the case. If price had done that, I'm wrong in my analysis. I want to be out of the trade. Okay, it's as simple as that. I want to be out of it. And maybe, yeah, I'll get out of it. And then there is another bounce that occurs off the weekly, but that's something I'll take at the time. I want to get out of the trade when I feel that I'm wrong, not hold on to it and hope that we get another bounce there. So I'd get out of the trade and then review what's happening once I'm out of it. But I guess fortunately in this setup, we had a lot of strength of that bounce, and it's continued here. So yeah, that's Tezos chart of the week. So if we come back to here, okay, you can now see that I want to cover in tonight's lesson routines. So this is going to encapsulate my routines, specifically my daily routine when it comes to well, I guess most of you are already going to know this partially, but I've expanded upon the daily update sheet I'm going to be giving you. So yeah, there's more information inside of it now, and really you can possibly, as I know members inside the group have already done, add to this, make their own updates, make their own routines, and that's kind of what I recommend. You do want to get to that stage where you are essentially able to make your own routines in the morning, I suppose, not just like copy out all my routines necessarily, but members in the group are doing that already, and you can see that they are excelling, because what is so important about having the routine is obviously having a plan in place. And if you do not have a plan, your plan is to fail, essentially. So moving on here, I'm going to be going over my trading routine, okay, which prepares me for the day ahead. So I want to be prepared for the day ahead. I want to have my plan, and really I want to know the setup that I'm going to take before the setup's even there. Okay, just as you've heard me say before, I'm trading this range before the range is even formed. By doing these daily routines, by marking out your important levels, by being aware of the setups that are there or potentially there, you've got such an edge on the competition, because you're already ready before the majority are still working out what's going to happen next. Okay, so marking out my key levels, okay, is obviously a key part of the daily routine, a key part of your starting plans, okay, and plan all possible trade setups. So what I mean by this is, when I start the day, I'm going to give myself a possible bullish setup and a possible bearish setup. So I'm not just going to give myself only one setup. I am going to plan for a bullish scenario, and I'm going to plan for a bearish scenario. Many times you're going to see me come on in the morning, and I'm going to say something along the lines of, I'm not in a position at the moment. Give me a rise to 10,000 and I'll look for a short. Give me a decline to 9,000 and I'm going to long. And until that happens, I'm not going to enter a trade. So it's really, I'm prepared for a rise, I'm prepared for a decline, and I've worked out my plans ready for the day ahead. And all I need to do is then sit back and essentially relax until something comes to me and a setup is presented to myself, presented. So moving on here, I will take the trade that comes to me. Naturally, I'm only going to take these trades when I feel that it's in my favor to do so. So I'm not going to feel pressured. I'm not going to feel under any external forces that are going to make me trade. I trade when I want to trade. I trade when my setups have been met. And if none of that is the case, I'm just not going to trade. And as I've said before, not taking a trade is a trade in itself. Okay, so how can you have the confidence? How can you have these plans? And how can this daily routine, starting routine, help you in identifying the trades before they even happen? Okay. And it all comes down to marking out like we have here. Okay, so this is obviously similar to the daily trading sheets that I post every single day, Monday to Friday anyway, in the group chat for you. You can see that I am now going to be expanding upon this. So from tomorrow, you're going to be getting a upgrade. This is obviously the one that I have been using myself personally for a while. I gave you glimpses of this one probably about a month or two ago. Gave you a glimpse of this, and there was a lot of people like, oh, please can you give us the updated sheet? So I thought, you know what, I probably can just give you that now because I've talked about all these theories. So yeah, from tomorrow, you're going to start getting this updated sheet, which I thoroughly hope will assist you in the mornings. Okay, I'm going to talk you through what exactly these things are. Like opens are new, obviously, when we're looking at our open interest. So I'm going to talk you through this. But this is my daily trading sheet. Okay, so I have all my key levels referenced. Okay, so my reference levels, for example, daily open, this is my reference level, and I will be prepared which setups I will be prepared to take before they are even visible. So how does this assist me? So this is for an example where I'll be able to recognize, okay, if our daily open is here, have I seen a bullish daily open? Have I seen this? The initial balance is really strong here, and then that's how I'm going to decipher. Okay, today my daily open is a big reference level because we saw initial strength, or did that daily open get nothing, and I'm not really so interested in a retest of the level. So. By being firstly aware of the levels and then the context in which those levels have arrived from are obviously really important. But then also being just aware of, for example, where your weekly point of control is. These are just big reference levels that you're always going to have to be aware of. Okay. So context. Context is something that you really have to be working out in the morning, okay, every single morning, referring to this because it's going to give you your base understanding and structure for the day. Okay, so you've heard me mention context many times. So obviously, what is context? I suppose so. Context firstly is going to be something as simple. It can be very, very simple, and you do want to keep things as simple as possible in trading. Okay, the more that you try and complicate things, the more you could get analysis paralysis, where you're going to have so much information in front of you. And it could be a bit daunting thinking, I'm lost. What do I do next? So I want to urge you to keep things as simple as possible. Okay. And at the moment, if you haven't, if you do want to only, understand and use the things that you feel comfortable in using at this moment in time. Otherwise, you will find yourself in this position where you've got too much theory and then you don't actually know which setups to take. Okay. So I do think that by having this, by having these plans in the morning and a routine to get yourself ready, you're going to identify these setups and then you're going to take them when they come, sort of thing. Okay, so firstly we want to identify context. Okay, so what I mean by this is very, very simply trend direction. So say to yourself in the morning, we're going to be looking at something like the 15-minute chart, 15/1 hour charts. This is something that I refer to in the morning to see what the trend direction is on a local time frame. So a small midterm time frame for me is the 15-minute/1 hour charts. So I'll be saying to myself, okay, what's the high term time frame doing? And this is where I'll be looking at time frames such as the 1 day. And what's the local time frame doing? Something such as the 15/1 hour chart, depending on the volatility that you've had overnight. So I'll be really simply saying to myself, okay, let's say we're in a 15-minute uptrend. Well, then that's gonna. It's the reason why I need to know the context of the trend direction is because if something is going sideways, I'm going to be trading different than if something is trending. And a really good example of this is actually from today. So think of, I've been talking through Link a little bit in the Champions chat today, and I've been saying, I'm trading Link, long, and the way that I'm trading Link is I'm compounding. And I'm also trading a stop loss. So what do I mean by trading a stop loss? As price goes up, instead of going take profit, take profit, take profit, I am not taking profits, and I'm adding actually on the dips, and I'm trading up a stop loss with the higher lows on price here. So that's an example of how I trade when a market's trending. I'm very conservative in terms of I'm not taking profits as often, and I'm adding onto positions, and I'm trading a stop loss. Whereas if something's going sideways, well, then I'm not going to be adding on to this. I'm going to be very tight on myself, saying I'm buying the lows, selling the highs, and I'm not going to be adding on at the middle of the range necessarily. So, determining whether you're trending or whether you're moving sideways is going to have a massive impact on the whole trading day ahead. So obviously this is one of the first things that you're going to need to write down on your trading sheet. So what's the context of what's happening on, for example, Bitcoin? Are we moving sideways or are we trending? The next thing that I'll be writing down is higher term time frame Elliott wave counts. So for me, the macro, so high term time frame Elliott wave count, is something that's extremely important to me in terms of if I believe that we're in a trending wave 3 piece, I'm going to be very aggressive. Let's say if I believe we're trending upwards in a wave 3, I'm going to be very aggressive trading that long. So that's going to be where I'm very aggressively looking to look to long every dip. Okay, I'm going to be looking to compound heavily, and I'm going to be looking to trail stop losses. Whereas if I think we're in a wave 4 triangle, well, I'm going to implement a total different style of trading. I am going to be more expecting ranges. I'm going to be very tight on taking take profits, and I'm going to be only interested in really the best, entries near the lows or shorts near the highs. So having the idea of the high term time frame Elliott wave count is for me a massive bonus, I suppose. Like, it's one of the things that I would look at every day. Okay, and it's not that I'm changing my Elliott wave count every day, but just by being aware of where we are inside that count is very important. And thirdly, I'll be looking for the context of CVD divergences. So let's say that we are, like currently we are in at the moment trading Bitcoin, and Bitcoin, in my opinion, is in this sideways range at the moment. Well, that's not really my opinion, it's a fact. So when we are in this sideways range, we can be looking at CVD divergences, and this gives us the context of what's the larger trader doing. So we're really now understanding the chart, and we're thinking to ourselves, where does price want to go, and how well is it doing its job of getting to there? So we can say to ourselves, if we see price moving down, but actually moving down on heavy volume, but actually making a higher low, and we're getting bullish CVD divergences, well, this is telling us the context is likely that the bigger traders here are actually expecting to move up. Thus, they are sat there with limit orders, buying everybody's big sell orders. So CVD divergences for me are, along with trend direction at a high term time from Elliott wave counts, this is how I'm getting my context for the day. And this is how I'm going to decipher really to get my daily bias. Okay, is my daily bias bullish? Is my daily bias bearish? For instance, if my daily bias is bullish, I'm going to be more interested in longing dips. And if my daily bias is bearish, I'm going to be more interested in shorting rises. So by having that daily bias is something that's helpful to determine what type of trades you're looking to take. Okay. So next, inside of your daily routine, once you've identified the context of the day, you want to be moving on to the important levels within the day. Okay, so we will be looking at things such as CC Fibonacci, and again, this is the same. This isn't new for you. This is something that's been in the trading updates for a while. So I'm going to go over this section pretty quick. But obviously, the CC Fibonacci, the global and the local. Global is obviously, like I showed you on Tezos, from the weekly, daily, weekly charts, very high term time frame levels. They're not interacted with so much. For instance, on Bitcoin, the CC, global CC, has been interacted with twice. And both of those times was a major high before massive decreases in prices. So literally over the last 2 years on Bitcoin, you could have taken 2 trades, both off of the global CCs, and made a lot of money each time. So the global CC is just a level that's not interacted with often, but when it is, the profits are absolutely insane. So you need to be aware of where these are. Okay, and obviously the local CC is derived from our smaller term time frames, local lows to local highs. And again, important levels for day traders more so. Okay, next we're going to be looking at our 4-hour exponential moving averages. I like to use the 55 and the 200. Again, this is nothing new either, and really simply these are support and resistance levels. I find that out of all of them across the different time frames, different EMAs, these are the two that are most respected. So I do always like to be aware of where the 55 and 200 on the 4-hour are, and I would never trade off of these alone. Let me tell you that I'd never trade off of them alone. I don't care about the crosses. I only care about where they are in terms of the line, and seeing if there's then more confluence for the support and resistance levels which I'm looking to trade. Okay, and thirdly here, the pointer controls. So this is new, but I'll be looking at the daily point of control, the weekly point of control, and the monthly point of control. So for me, these then come together to give me my important levels. So why are these levels important? Well, these are levels which I can be looking to take trades off of. Okay, so for example, a daily point of control, or a weekly point of control, or a monthly point of control, if I'm starting to see a monthly point of control, okay, on top of the 200-hour exponential moving average, on top of a local CC, well then already I can see I'll see that staring me in the face. So I'll have done the work, I'll have done, this doesn't take long, I'll have done the work in the morning to identify the levels, and then if straight away I can see, a level, 3 levels within $10 of each other, that's going to straight away stare at me in the face and say, woof, there's a really important level. We're seeing 3 levels of confluence straight away. This is going to give us some high probability trade setups. Okay, so that's why we mark out these levels, and then we try and see, okay, which ones are really close to each other, which trade here is staring at us, just saying, take me. So this, that's the important levels. Next, we want to look at our key horizontal levels, which again is, for me, the biggest levels in trading. So obviously every day I give the key support and key resistance levels. And the way that I determine this is the levels which have the most highest confluence. So when I do give when I give you the daily these support and resistance levels, it's something that I have done myself. So this is not taken from an indicator. This is not taken from a moving average. This is not taken from Fibonacci. This is a level which I've seen has several layers of confluence over it. Okay, so it should be a really strong support or a really strong resistance level. And let's remember this, that if we have a really strong resistance level, but you actually in that day you break through it, because we have to acknowledge it's not 100%, it's not like it has to hold. But what I would say is, if I give a strong resistance level to you and we break through that, when you get it retested, you would expect it to then hold as support. So the really big levels that I give you, those key support and key resistances, they are very strong, and you would expect them to hold. But acknowledge that if they are broken, when they then become retested, you then expect it to flip into, that big resistance could flip into big support. So these horizontal levels are absolutely, massive support and resistance levels. Okay, and to get these levels, we're looking at several layers of confluence. Okay, so we want to see a lot of things over this, and this is where you are definitely interested in trading. So without a doubt, you are always going to be looking to trade off of your key horizontal, and you're just going to have one key horizontal. Well, you could have more, I suppose, but for myself, I like to have the next level of resistance and the next level of support, which I am almost guaranteed going to be trading off of. And these for me are my really high reference levels where I will look to trade every single time. So really important that you identify these levels. When all of this is coming together, you can see how you're ready for the trade before it happens. You've identified that massive support, which you're obviously going to generally be looking for longs at. You've identified that massive resistance, where you're going to be looking for shorts at. Okay, and then you can be patient. If you just identify these two confluences, you can be patient for the rest of the day as the price of setup comes towards yourself. Okay, so next we're moving on to a new section, which is the volume information. So volume information is a new section that I've added, and this is going to be very, 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 very useful. In my opinion, maybe one of the most important. And this is for looking at your statistics. Okay, so what I recommend is, although I do have a live stream plan for this, I will say this in terms of how I do my statistics and journaling. But nevertheless, you may want to work out yourself in the meantime. What we're going to be looking at is open interest. Okay, so really simply, what's the open interest doing on the previous day? And what is the daily volume and delta of the previous day? So why is this information cooped with your funding, and this is the current funding, bullish or bearish, why is this volume information so integral part of your trading? Well, I want you to really build up some statistics yourself. And I know many of you don't have the time to do this, and that's why you look to me to do it for you, obviously, but I do recommend that you do try and take a little bit of time to record this yourself, because this is one of the major ways that I become successful in trading. Firstly, by recording the statistics. So firstly, to get statistics, you have to record the data in the first place. So by daily recording what the open interest is, we can start to see it, whether open interest is slowly going up, open interest is slowing going down. We can see volume, okay, and the delta of the daily candle, whether that volume is also increasing along with open interest, and whether delta is also increasing along with open interest, or whether we're seeing discrepancies in open interest and volume, or interest volume up and open interest down. And then combining this with the third factor of the current funding, whether this is bullish or bearish, this is already just from the data alone. And what I love about the volume information is that it's not a signal, it's not an indicator, and it's all in the eyes of the beholder almost. That you do give this information to 10 different people, and they are gonna possibly anyway interpret, look at it. I can never get my words out. Look at it in 10 different ways, and I like it when it's like that. I don't like some sort of indicator that says buy, sell, because 100 people look at that, 100 people look at it in the same way. There's no edge in that, and I think indicators that say buy, sell are always going to lose you money in the long term. I like information that's hard, cold facts, and I like information that has to be looked at in the right way, the most sensible way, and ways that we can see that historically from the data that we're building up. We can see historically then statistics of how often is it actually true that we're seeing increases in price with increases in open interest and increases in volume, that has led to continuation the following day. Obviously in a trending environment, this is the sort of statistical edges that you can build up by firstly recording the information that gives you, or myself I suppose at the moment, that confidence in really being trusting in my technical analysis. And this is how you get from that all the theory stage to actually then putting money on the line and then having the confidence to continuously take these trades. And again, with all the other information, we like using this alongside our global CCs, our local CCs, our weekly point of controls. We're putting this all together. This is where we gain our confidence. This is where we understand our setups. Okay, and So yeah, the volume information that I'm going to be adding into this daily update for you, I feel is extremely useful in determining the overall strength of the trend that we are in. Okay, so then we're going to be moving on to opens and notes. So opens is a new section that I'm adding into this, and I will just say this now. I do have a live stream planned for opens, okay, because there's many different strategies for this. So I'm going to teach the strategy that I use, okay. So this refers to daily open strategy, weekly open strategy, and monthly open strategy. I'm going to probably in the next live stream, I'm going to focus on the daily open strategy, and there's many different ways that you can trade it. So I'm going to teach you the way that I trade. Just so you're aware, that's coming very, very short soon. Maybe next week or the week after. And this is going to, so just on the sheet at the moment, I'm going to give you the daily, the weekly, and the monthly opens, okay? And the theory behind this, I'm going to be explaining maybe next week or the week after, okay? And then the notes. So really simply, I'm going to be saying what I'm trading, okay, and what I'm looking to trade, and then finally you'll have the key notes, so daily trading notes. So whether I'm expecting, maybe the position that I'm in, the push up, the push down, and really what's my keynotes for that day ahead. Okay, so now I want you to think of something a second. So we have a nice picture here, and I want you to think to yourself, I'm basing everything that I'm trading, so everything that I've gone through just now over the last 40 minutes is how I prepare my whole trading day. So that's how I'm doing everything is pre-planned for me. When I'm identifying these levels, I'm not just doing it to waste time. I'm doing it to really, for myself, gain an edge on the competition. I'm identifying these levels, which then in turn is identifying my setup, which then in turn is giving me the advantage of being ready to know what I'm going to trade before prices even reach that level. Okay, so that sheet that I've just gone through is what that I have been using for a long time, and it's something that I will do every single day. It's extremely useful for me, and if I did not have this, I would not be as a successful trader as I am. So I really want to really emphasize this is massively, massively important, and it might seem like a mundane task that is a bit boring, but without this, I believe that you will not see success. So this is really highlighting the importance of this sheet. Okay, massively, massively, massively important to really succeed. And firstly, I want you to think: how long do you think that sheet takes me to do in the mornings? You can have a little guess. And today I do have a second glass of water, so we can take a sip of our second glass here. Yeah, so actually this is a little bit of an this is a little bit of an exaggeration, but I'm saying 25 minutes. I actually can do this in about 10, but for the sake of the video, I'm going to say it takes me 25 minutes in the morning. Okay, so I personally like to trade the London Open. Okay, so generally speaking, although this isn't all the time anymore, but I really like to be in the routine of waking up before London Open. Okay, so I'm ready to trade London Open. And so I'd like to be waking up around, really 45 minutes, 1 hour before London Open, to record my statistics of what I'm looking to trade for the day ahead. So I'd like to give myself 25 minutes to mark out all my levels. Okay, record what I'm looking to trade for the day, understand what my daily bias is, and then I will simply have understood before the day has even started moving, so referring to the stock market here, so before the day has even ticked open, I already know where I'm going to trade. So at the moment, price is doing sideways nothing, and before the open has even occurred, I already know where I want to trade. I already know where I want to short if it goes up. I already know where I want to long if price goes down. And I know exactly what I'm doing before it's even begun. And that is just a massive, massive advantage that I just cannot stress. Too many traders lose money because they have no plan. They don't know what they're going to be doing next. Okay. And if you are under this analysis paralysis, again, I can't say the words well, but if you are under this, just stuck in a hard place at the moment where you've done so much analysis and you can't work out what you want to do, well, I think that you do not have an actual plan in place. So you need to work out a method of, okay, how am I actually going to determine where I'm entering? And doing something along this lines of having the daily routine, having the plan, recording the numbers, recording the statistics, and then seeing, okay, let's say you've built up statistics and can see that you have let's say you have a 79% win rate when you are trading a local CC that sits on the 200 exponential moving average, and you've recognized that number. You know that you have a 79% win rate when you trade this. Well, then if price reaches up to that level, without thinking, you're going to take the trade, sort of thing. Like, you're going to go and you're going to look to take that trade because historically you have a very good win rate on this. It plays out over time. Why would you not take that trade when it's presented to you? So I think, just for a little tip here, that if you are under this, you have so much information but you can't work out what you actually want to trade, you need to have your plans preset. Because if you are not having a plan and you spend, you could be spending 10 hours a day looking at the chart, but if you spend 10 hours a day every single day looking at the chart, it's not going to make you into a good trader, and it's never going to make you profitable. You need to start pre-setting your plans, so writing down, what are you going to trade today? And when it hits that level, instead of getting analysis paralysis, just take the trade. Okay, just take the trade, record your winners, record your losses, and then you can review them, obviously, when you journal. But I do think you just need to put some skin in the game. Don't sit there thinking, oh, I might win, I might lose. Start trading. That's the best thing, obviously. And then, to start trading, formulate your plans. Okay, write down where you're going to trade. When it hits those levels, trade it. Okay, record your winners, record your losses, build up statistics, and I think that this is the main way that you're going to advance. But back to this. Sorry about that, a bit off topic. I can ramble. But yeah, 25 minutes, we're going to say it takes me to record this. Okay, how many then from 25 minutes we have? 1 second. I think what's 1 second? So I've spent 25 minutes in the morning, fresh, going through going through what I want to plan for the day ahead. Once I have planned out everything, Okay, I'm going to set my alert. Let's say that I've seen all my, all the key levels that I want, and I've recognized this key level that I want to trade at. I'm going to simply place an alert at the resistance, an alert at the support, and then I'm going to sit back. I could just sit back and do nothing for the rest of the day, or possibly the next few days if nothing happens. So then when the alert goes off, that is 1 second. That once that price is hit, 1 second, instantly I'm alerted. I already know what I wanted to trade when this hits. Let's say if it reached resistance. I already know that I want to trade a short when it hits this level. So that has been 25 minutes of planning, possibly 48 hours of doing nothing, coming back, seeing the alert go off. No preset that I wanted to have a short here, but my style of trading, and again, this isn't going to be specific to everybody, my style of trading is once I recognize the level, I don't really like presetting so often, so I'll have an alert there instead. And so when that alert goes off, it then requires me another 5 minutes to actually review that trade. So let's say I identified 10,000 resistance. The alert goes off 1 second later. I'm going to be checking out what's going on. Are we seeing a rejection at level? What's the volume like upon hitting this level? What's the open interest like? What's the delta like? Are we seeing any type of divergences? These 4 key factors, literally, I can look at that probably within a minute, less than a minute, let's be honest. But again, I'm going to exaggerate a little. It takes me 5 minutes, let's say, to review this. So in total, I've spent 30 minutes to potentially make thousands and thousands of dollars off that trade that I'm taking. So for 30 minutes to have returns of potentially thousands of dollars, you can see that this is, like who wouldn't start to formulate their plans, who wouldn't start to put in the time in the mornings to really know what they're going to trade for a potential 30 minutes of your time taken, which is then freed up the rest of your day. You do not need to be at your computer for the whole day. You literally can do this work in the morning or in the evening, go to sleep, go out, go do whatever you want, wait for an alert, or if you do not have the luxury of time of getting to your computer straight away, well, then you can preset. Okay, you can just preset your order, and then you come back 1 week later, win, loss, whatever happened. You can review what went good, what went wrong, but you can see why we're doing this. We're working out our plans. Okay, so our daily routine, it all starts with our daily routine, which then gives us our plans, which then gives us the levels that we want to trade off of, which then gives us an alert, which then gives us our time to review that very quickly to make an informed decision. Okay, it's reached the level that I want to short. We're seeing everything, the context then that I like to look at in the moment is still bearish. Okay, I'll take the short. It's as simple as that. And that is then the way that I like to start and end my days. So 30 minutes time taken in, throughout it for potentially thousands of dollars, then definitely worth it. So that's that. So I'd like to say, does anybody now have any questions specifically about my trading day? So my routine in the morning, what are the levels that I'm obviously looking at here? I'll go back to that sheet really quickly. Okay, so let's go back here. I can just go into here. I can go here and I can go Shift F5. So does anybody have any questions about the new sheet? So this is obviously something that I'm going to be going through in the mornings here. So every day you're going to get this. I'm going to be giving you the trend direction, high term time from Elliott wave counts, the global and local 6/6 or CC Fibonacci's, our daily opens, our point of controls, 4-hour exponential moving averages, volume weighted average price. And again, I am going to do a live stream on this. It requires its own live stream. Our key horizontal levels, divergences, previous point of controls, previous day, previous week, previous month, our volume statistics. I'm going to be giving you, the open interests, the volumes, the delta, the funding, the notes of things that I'm looking to trade and how I'm going to trade it. And then finally, I'm going to be giving you also, the assets that I'm looking to trade today, whether that's Bitcoin, Link, etc., etc. This sheet, I'm essentially doing all the work for you on it, although I do recommend you do it yourself as well. But essentially, I'm going to be doing all that work for you, and then even giving you the levels that I'm then looking to trade off of. And if I do have a bias of the day being bullish or bearish, then I'll update you my bias of the day. Okay, many times that is going to be neutral because it's going to be a simple, I'm waiting for the drop and waiting for the rise to take the trade. In that case, it's neutral. Or it might be that I'm already in a trade and I can say, well, I'm expecting a rise in price today. But so any questions that you might have about this, write them to me now, and I will be more than happy to answer your questions. So let's see what we have. Let's go. Let's go back into this while I see what we have come in. And let's go into this. So we do have some questions here. So let's see. We have a new format here of the questions. Let's see what we got. This is pretty cool. So just loading them up for you now. Oh, really, really cool. Let's go. Thank you for preparing this, Mike. Really, really, really amazing, by the way. So, question from FinTech Outsider. What time frame do you check the CVD divergences? 1 hour, 15 minutes? So, if I'm honest with you, I will be checking it across both time frames. The one that I'm going to give you in the daily update sheet is from the 1 hour time frame. Why the 1 hour time frame? The reason I do it from the 1 hour time frame is simply because it's good for day traders and it's good for swing traders. So it's a level that everybody wants to be aware of. Are we seeing those bullish divergences on the 1 hour? Well, then we can expect, the context is that we are, really simply we can say for a hard cold fact there's somebody sat there with a limit order absorbing orders. So yeah, I personally would still check the 15-minute. But on the update sheet, I give it a 1 hour because it's a really nice reference level for swing and day traders, basically. Next question from KN812. His question is, when you say POCs, are they naked POCs? No. So the levels that I give you on this sheet are going to be literally the point of control. So from a weekly profile, and again, I haven't actually covered this on a stream yet, but I do 100% plan to do this. There's so many live streams still that I've got left. It's unreal. But yeah, basically the point of controls here that I'm getting through are from market profile theory. So are, leaning on point TPO charts, but also you can get your volume POCs. So I'm just giving you simply from a volume perspective, the daily point of control, and then on the weekly profile where the most action, where the most volume has been, and then your monthly point of control. So no, they're not naked point of controls. They are just the daily, weekly, and monthly actual point of controls. Okay. Again, from FinTech Outsider, we have local level. Do you mean 1 day, 1 week, 1 month? No. So actually the local level is a little bit, I say my local level, but maybe 10 people in the group have a different level. And this is the art of trading, I suppose, that I'm pretty good at identifying my local levels. For example, here on, let's just take Tezos for an example. I would say to you right now, where are you? Okay, so let's just delete everything Tezos. Look at this chart. And where would you pull your Fibonacci from? I'm referring to a low to a high. Which low would you pull your fibs from here to mark out a support? Okay, think about it for a second, and I'll tell you where I would mark out my local. I'm talking local Fibonacci. So think for a second which one you're going to use. And I'll tell you now, although I would say that this is a valid pull, definitely this is a valid pull from that low to that high. And actually this is really nice. You see how that's the 382, by the way, and you bounce literally off of that. 2.5%. So that's nice that you see this from the overall low to the overall high, but that's not really so much what I would call a local fib. So my local levels are like this. I have another example. So here, which low to high are you pulling from? Many people, I think, are going to say, well, this low here to this high here. And I'm not going to say that's invalid. But the way that I like to do it is where it got impulsive. You see, this is where it was really impulsive. So we had a grind, move back down, impulse out of it. So I would say my local fib here would be from the where it got impulsive to the high. And then this would be like my local fib pull from the latest impulse, which led us to the high, from here, so it's not necessarily the overall, although here the difference is so small it doesn't matter so much. But again, like different charts, different example. Let's just randomly click on link, for example. So like here, where I guess this one's quite obvious really. Okay, so it pretty got impulsive there. So like I'd be pulling my fibs from here to here, sort of thing. But again, not everybody would recognize this. Not everybody is going to, it's a little bit. It's the one thing that's a little bit. What's the word I'm looking for? It's a little bit in the air that my local levels are not always going to be the same. But yeah, my local levels are taken from a small term time frame. It's hard to say whether it's the 1 hour to 15 minute. It's really from the latest impulse. Okay. So next question. From Mattis. On which time frame do you base your context on daily? No, so my context for the day, so my daily my daily context is really going to be taken from like a 1 hour chart. Okay, so I'd be looking at the 1 hour chart to determining my context for the day trading day, so for the day ahead. So really I'd be looking at that, the last 8-10 hours of price action or while I've been asleep, reviewing the bigger picture. But for me to really get my daily context of whether I'm bullish or bearish for the day or just neutral, then I'd be really referring to 1 hour charts to get that daily bias from maybe down to 15 minutes. But one hour, I like the 1 hour. It's a really nice time frame. I don't know how else to say. So yeah, 1 hour time frame. Okay, Linda Lou. For your invalidation on XTC, I noticed that the percentage of your stop is at 1.9%, almost 2% is lost. Isn't that a lot? No. It's really, really simply no. I would say that is not a lot. In fact, I would say 2% is actually not a lot. But you have to also remember, and I really recommend you, by the way, I really, really, really recommend that you watch the position sizing video that we have on the website. 2% is never a lot, because my stop loss could be 200%, and I'm going to lose the same amount of money whether my stop loss is 200%, 2%, or 0.2%. I'm not going to be losing more money because of the stop loss being different. So whether my stop loss is 2% away or 200% away, when that stop loss is hit, I'm going to lose the exact same amount of money. And this is all about having the correct position sizing. I really recommend that you watch the video on the website about this, because yeah, in my opinion, that this is not a lot. My stop losses are always like I can't say always, but I always have wide stop losses, so it's really normal for me for my invalidation to be like 5% away. I always will use really big stops, and this is a big difference for me to many others, that I am more often than not having a 5% stop, whereas many people are like, oh my god, I need to trade with like a 0.2% stop loss, and have a guess what, they get stopped out time and time again. They don't give themselves room to breathe. They have no space for their setups. They lose money. So yeah, I prefer wide stops. I use soft stop losses, which are wide. But to answer your question, no, it's not. I would not say that is a wide stop loss, basically. And yeah, those are those questions, and we have a few more come in here. So let me see the next one that we have here. So once again, thank you, Mike. This is brilliant, by the way. So let's start this. From Lama. Maybe you can give a practical example of the theory of your daily routine, or you just explained on a fresh Bitcoin chart. Yeah, I think maybe I'll just record me actually running through this rather than doing it now. I'll just like record a video. It makes more sense because I've already done it today. This morning gave you one, so I will just record a video of when I'm actually doing this. That way you can see me doing it live in the time when I wake up in the morning, and I'm more than happy to do that. So yeah, I agree, a practical example would be very, very beneficial. Rather than doing it now, I'll just record it when I do it tomorrow. Okay, and then I'll upload that to the website for you. Dale, so your daily planner is more of a swing trade or day trade? Well, it's a little bit of both. It is a little bit of a swing trade, and it's also for the day trades, if that makes sense. So it's more of a swing trade in terms of there are sometimes, and I identify a level, for example, a key resistance level, which is sometimes $500 away. I'm not always giving really close levels. So if my key level is $500 away, and it's likely that's then for my swing trading, I'm waiting for that level for a swing trade. But at the same point, I've got many levels with it, like daily open. You're only gonna care about that as a day trader. The daily open is not something a swing trader is really gonna be so worried about. So then we have on this sheet levels for day traders and we have levels for swing traders. So it's a bit for everybody there, I would say. Linda, you said that as we prepare our daily routine in the morning, set alerts so we don't need to stay in front of the PC all day. Does this apply for scalp traders as well? I would say as a scalp trader, it's really likely that you're in front of your PC all day, because the thing is about scalp trading, that let's say that this sheet that I've done here is on Bitcoin, and you have to remember that if I'm not trading, if you're a scalp trader, for example, I'm not so much scalp trader anymore. To be honest, like I'm not really so much a scalp trader anymore. But when I was really intensely scalp trading, 5 years ago, when I was just like insanely scalp trading, if I wasn't trading one thing, I'd move on to another chart, and I would literally be trading all day, because guess what, I have access to 100 charts. There's always going to be something for me to do. So I would say as a scalp trader, you kind of don't walk away from your PC, because there's always something for you to do, there's always something for you to trade. Whereas and obviously you do that because you like it. Don't feel forced as a scalp trader to trade something to make money. That's gonna lose you money. You do only still want to be taking these steps because they're actually there. But as a scalp trader, you always have something to trade. So I suppose it is there for a scalp trader. If you only want to scalp Bitcoin, for example, and you're waiting for the level and nothing's happened, then yeah, as a scalp trader, you can still walk away, do other things. Like absolutely you can. But maybe you also just want to trade, so do you trade something else, But yeah, to answer your question, if we're using Bitcoin as the example, we've identified our levels and there's nothing there, then yeah, as a scalp trader, we can walk away, wait for the alert, and then come back. There's no need to be at your PC all day. Matic, do you usually set alerts exactly on the level or prior to hitting the level? Yeah, you do want to give it a little bit of space. Not so much space that you're going to have the alert go off when it's not even hit the setup. But let's say you're looking at $10,000 for an example, then we're going to probably be setting this alert around $9,888 sort of thing. So I'm sorry, $9,988. So like $12 below the big level you're looking at. So we're not going to be setting our alert at $9,800, like $200 away, because that alert's pointless. But we're going to slightly front run our level so we can get there a little bit prior to the action and make sure that it's actually alerting us. We don't want to be in the case of having too wide alert and getting alerted when nothing has even happened. The alert is waste, and so I will slightly front run it, but not by so much, not by so little. So yeah, maybe a few $10, front run of the level that I'm looking to trade, so I can get there as it's hitting. The Phantom, how do you factor your alts into the analysis? Do you do separate sheets for all alts that are on your watch list? No, so actually my altcoin analysis is so much more simple, if I'm honest with you. The way that I trade Bitcoin is really in-depth, really somewhat sophisticated, but the way I trade the alts is actually really, really simple. I literally look through my altcoin list in the morning, and I know the alts already that I want to trade, and I will just spend, honestly, this morning, I looked through 197 different altcoins. That's every single Bitcoin pair on Binance. And each chart for me takes literally 5 seconds. I'll look at that chart and think, there's a setup or there's not a setup. I'll go dun, 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 dun. And I've done 197 different charts, spending about 5 seconds on each chart. And if I like the altcoin, I'll go over and do an analysis on it. But I do not do such in-depth analysis on altcoins. I'm very much momentum, somewhat trader on altcoins. My analysis on altcoins is different, to be honest with you. I'm no way in depth, nowhere as in depth as I am on Bitcoin, if I'm honest with you. My analysis is actually different on altcoins. And that's not to say that's a bad thing. I still trade altcoins well. When I trade altcoins, I trade them well. Obviously, I do trade them less. But like for instance, this morning, I gave you that update on some altcoins, and like every altcoin has risen in price. So, but for me, the way that I look through my altcoin list and I can decipher, looking at a chart, 5 seconds, yeah, there's something there, there's something not there. If there's something there, then yeah, I'll do a little bit more in depth, like Fibonacci work on it. But I'm not going so in depth looking at all these different things on altcoins, just so you're aware. Jahala161. Hope I pronounced that right. Hello. If you could only check one thing after your alarm goes off, which one would it be and why? Also, which app/indicator do you check it on? Really good question. I would have to say, I mean, this is the benefit. I don't only have to check one thing, but I guess if I had to check only one thing, I would probably say it would be it's a hard question. I guess I would have to say volume, and I would check that on ExoCharts. Yeah, I would say that's probably volume, and it's probably on ExoCharts. Yeah, I'm happy with that answer. And there's the questions. And it looks like we have one more final question here, which is from Teruska, which says, "Hey Daniel, I noticed monthly open 9132 opened below previous month value area low and is now above. Can the CCV applied in this case?" Yeah, so the way that I trade the CCV on the monthly charts, obviously this is referring to last week, is totally different on the monthlies. And I'm going to dedicate a live stream to CCV on a monthly time frame, because the way that I trade it, the way that I trade it is different. So I cannot really give and really get, because it's something that's going to be too long to explain. So I do plan on doing a live stream on this as well. But essentially, yeah, you can trade it like that. Essentially, yes, you can trade a CCV on a monthly time frame, but the way that I actually trade it is different. The theory is the same though. But yeah, that is then all of the questions, and I honestly hope that has been really helpful for you. So I guess I will just end by saying this, a little bit of news, obviously, that you do have now, by the way, the beginners trading section over in Discord. So you can see now that we have employed the trading assistant, and this is for contenders and champions to come over here. You can see the trading assistant is working so hard. It's really, really, really good. So that way, if you have any questions and more basic level, easier beginner questions, then the trading assistant is obviously to help you. You got Mike, you got me. We're building a really nice team here. So yeah, that's just to alert you that the trading assistant is now a thing, by the way. And I will go back to this a second. So the next champion stream. So the next champion stream is obviously on Sunday, and I'm looking forward to this one this week because of the activity that we have in altcoins. So on the Sunday's champions live stream, I am going to be live trading altcoins for you. This is obviously going to be really, really nice because, as I've kind of said today, the way that I trade altcoins is different than Bitcoin. So you'll be able to see how I trade it live there. So yeah, we're getting some absolutely brilliant, lovely volatility. So yeah, on Sunday's live stream, I will be trading altcoins for you. So there's that to look forward to. That will be a good one. So again, same time, 7:30, in that champion stream, I will live trade altcoins for you. So summary, the key points of today. Okay, so this is our key points, and I want to go into here. So our key points of today's live stream. Okay, so really simply, plan your trades. Okay, point number 2, be ready to trade. And point number 3, understand the trade. So we have to be, first we were planning, then we are ready and waiting for that. And thirdly, the key thing, we're understanding why we're taking the trade. Because if you do not have the plan and you do not understand why you're trading, then you are just going to keep losing money. If you keep losing money, you're going to be depressed and give up on trading. That's not what we want. We want you to be planning, we want you to be ready, and we want you to be making money. And the only way that you can do that is naturally with the time put into studying, then moving from studying to actually trading, and then from actually trading to making money consistently. That's where we want to get you to. And if you start to follow, the theory that we've taught, the way that you work through your plans and how you get to those setups, and then the assistance that we can give you when you're actually then taking the trades, winning and losing alike, and you can get the feedback and help from us. So to end here finally, okay, I'm going to say this: knowing the trade before you see it makes life easier. So, we are trying to make our lives as easy as possible as traders. We don't want to be stressing out. We don't want to have several different things going on. We just want to keep it easy. To keep it as easy as possible, we're identifying our setups. We're waiting for them to come to us, and we're taking them. It's as simple as that. 1, 2, and 3, taking the trades, making money, and going to sleep at night. Okay. So yeah, that's where we're getting to you towards. Hope that you have enjoyed tonight's live stream. I honestly hope that you have thoroughly enjoyed it. Again, I will stress that now, this is a brand new feature that we have over here in Chart Champions. So brand new, we have the trading assistant. He's here to help you all, primarily with your beginners questions. For more advanced stuff, you have me and Mike. But yeah, he's here to help you with your questions. So make use of this new service that we've added in. I think that's going to be extremely beneficial to you. Oh, cool. That's a nice message. Thank you for that. And I guess, thank you so much, everybody. That is a nice message. What a nice message to end with, by the way. Yeah, and here's some examples of some guy absolutely killing it. So well done to you. There's a lovely account. And there's a nice message to end with, I suppose. That's what you can get when you understand, you learn, and you practice. So yeah, more than happy to help you. I hope that you've enjoyed this stream, everybody. I'll catch you on Sunday's live stream, obviously for the live trading. Really nice to actually, see that live. And then next week on Wednesday, I'm debating to do. I must admit, I'm debating to do the opens, or I also really feel that it's really necessary to go over different, whether we look at the volume charts, whether we look at delta charts, or whether we look at time frame charts. So I've said before, I'm not always looking at time frames. So this is really, really advanced knowledge, but nevertheless, it is going to be really necessary to learn. So yeah, you can look forward for one of those two next week. So I'll catch you then. Have a good time. Thank you and goodbye. Cheers. Bye.